for helping me out for this course. Give about a little 10-minute brief on how to pick stocks, when to actually get involved in actually purchasing stocks, and if you want to put your money into the market, when a good time to put money into the market is. So, a couple of things. Usually the first thing you need to do is you need to open up an account. I always recommend that you open up an online account. That's generally the least expensive and going to be the easiest way. So you'll open up your account and then you determine how much money you want to put into the market. I'm going to use an example of, say, $5,000. You can start out with whatever you want. So if you're going to get involved, say you're going to invest $5,000, like I said, you can use any amount. You're going to take that amount and you're going to divide by 5. That means you have $1,000 to invest in 5 different stocks. Or you invest less money, say you invest $500, you're going to invest $100 in 5 different stocks. That way you have the ability to diversify. You don't want to put all your eggs in one basket. Basically, if you like technology, you don't want to put all your money into Intel, and then Intel goes down, and then all your money goes down. If you spread your money out over a bunch of different companies that are involved in different sectors, you have an ability where you can make money gradually over time. So with that, I like to pick stocks that are going to be able to pay me a dividend. Right now, if you put money into the bank, you get about maybe a 1/4% or a 0.5%, whatever that interest is. If you put money into the stock market and you buy a stock that's going to pay you a dividend, pull one up, like Walmart, for example. Walmart pays a 2.3% dividend. That means if you bought Walmart stock and over the course of the year, you invested $1,000, based on that percentage, you would get 2.3% yield back. That's how much money they're going to give you. They're going to pay you that every 3 months, basically, because everything's set up quarterly. So that's a lot better than having it in the bank. The other concern is you got to think is, well, what if the Walmart stock goes down? Well, then your valuation is going to be less, but you're still getting your 2.3%. So I try to tell people when you're going to invest, be a little patient and understand that stocks go up and they go down. It's going to be a constant basis like that. But again, over time is where you're going to make that money at. So like I said, me personally, I like to invest in things that I'm involved in. So for me, for example, I shop at Walmart. I think almost everybody that's in Oklahoma probably shops at Walmart. Almost everywhere you shop at Walmart. So if you spend money at Walmart, why not invest in Walmart? At least your money's going to be there. Everybody has a cell phone. So look at your cell phone company. Maybe you're Sprint, maybe you're AT&T. In my instance, I'm Sprint. Sprint doesn't pay a dividend, but my mother has AT&T, so I invest in AT&T stock. So again, that's diversified. Now I have a Walmart stock, which is a stock that sells stuff, service industry, and I have a telecommunications stock that's, say, AT&T. I like computers. All the computers I buy have Intel chips, so I'm going to buy Intel stock. Because again, that's where my money's going out, so I'm going to invest in things that I like. And it's very easy to come up with stuff like that. I also like to do something that I call a speculation play. That's a stock that has the ability to make a big move up. Usually doesn't pay any dividends, but you can make some heavy rewards on stuff like that. Biotech companies are generally the best ones, or they're the ones that I prefer to get involved in. One of the companies that I've picked is Celgene. And Celgene, as you can see, is a stock that made a drastic move. So once you have those 5 or so stocks that you want to get involved in, now you got to decide, okay, when should I start buying? When is a good time to get into the market? And if you follow the stock market, it goes up, it goes down. It's a constant. Since 2008, when everything plummeted and we were down into $600 and some on the S&P, that's when things were bad. And like I said, if you follow it, all you can do is you can get on to, I use Yahoo, and you can pull some stuff up. And just looking at the S&P, this is the one that I like to use. The S&P index is the best one to gauge what's happening out there in the world today. So you can see, over the course of the year, I don't like to go farther than that. You can see right now we're up at about 1505, and we've had a little bit of a pullback. So you never want to buy when things are going up, because in all likelihood it's going to start coming down. So you got to be patient. So right now, and if you follow a little bit in the news, just a couple of things that are going on because of the sequestration going on, the furloughs and everything. There's some market events that are coming up that's probably going to drive the market up or down. So I like to wait a little bit. And I'm also going to explain a little bit as to when to do a good purchase. So right now I'm looking at this area right here. This was the high point. probably like 15, maybe 15.10 or 15.20. And then we had a little bit of a pullback. And you see these little zig lines right here? They're called support levels. That means in all likelihood, and you can see the little dip here that stayed right above 1500, these two that are just below 1500, they're support levels. The stock market went down, it bounced, and then it went back up. So that's a level that I'm going to look for. So I'm not going to buy until I see the S&P go down to around 1500 at least. At least for my gauge right there. Because I said, again, that's a support level. So again, you look at the day and you kind of follow it. Now, if, say by the end of today, it goes all the way down to 1490, I look for more of those zigzag lines, and I try to find, here's support levels here. 1460, 1470, you can kind of move your mouse around. So you have to try to figure out some of those numbers. It's not rocket science, don't get too overly involved in anything, but at least try to figure out when is a good time to get in. So I said, for me, I'm looking at right around 1500. That's a support level that I want. If I see the S&P go down to 1500, that's when I'm going to start buying. Now maybe it's going to continue to go up. Then wait. Be patient. It'll eventually come back down. If the market continues to go up and up and up every day, I wouldn't be here talking right now. I'd be retired already. It will eventually start to come down. So once you have those ideas, now you have a day. So say the stock market dropped to 1500 today. You're like, all right, tomorrow I'm going to start buying. This is the time for me to get in. Then you're going to start looking at those particular stocks. So I'm going to look at AT&T. AT&T, again, this is a stock that pays a dividend, pays around 3%. I always like to try to get between 3 and 5%. And once again, now you think, when do I buy? Do I buy right now? Well, you got to try it again. You look for those same types of support levels. So right now the stock is at about 35.50. Highest it was 38. So this is probably a good time to buy. And it looks like it's in a little bit of a zigzag pattern right here. So for me, that's a pretty good support level right there. It looks like it's going to stay there. So that looks like that's probably going to be a good time for me to buy in. Worst case scenario, it looks like it'll go down to around these levels. These are your bottom support levels. So if I buy at 35.5 and some bad news happens to come out, hopefully it's not going to go below 33. And again, it's all hope. You can do a lot of research on companies. You can sit, you can try to figure out when you want to buy, when you shouldn't buy. And there's certain things to look for, but like I said, don't get too involved. Don't try to make too much out of it. Going back to the Walmart stock, there's certain things that I look for too. I always look for, obviously, dividend if it's going to pay. I look for earnings per share. I like to make sure the company's making money. I like to make sure it's been making money. Companies that you can pull up earnings per shares over the last maybe the 1 or 2 years. They've consistently made money. To me, that's a good company that you're going to get involved in because they're making money. So then you're going to make money, and you're going to constantly get that yield. The other things I look for are PE ratios right here, which is price to earnings. All that means is that wherever that earnings per share is, if you multiply that times the PE ratio, that's what the stock is at. 10 to 20, in between those numbers are generally good. Some are very high, some are extremely high. Apple is only at about 9 or 10 times earnings, which is about normal, because they make $50 a share. So their stock is about $500. This one's about 15 times earnings. That's probably a pretty fair number. Certain companies have a very high PE ratio, companies like Amazon, companies like Facebook, because they're involved in having people that are around. That's what their involvement is basically the amount of customers they have. So stuff like that I try not to get too, I don't like to get too overly involved in because they said, again, it's a little bit too much. But just for the brick and mortar companies like I said, like AT&T and Walmart, if you stick to those types of numbers, you find that information, you'll find a handful of good stocks that you can get involved in. That's it. I don't have anything else. Anybody have any questions?
Sir, what about investing in penny stocks?
Don't invest in penny stocks. That's probably they're generally not going anywhere. Penny stocks are usually not on the main exchanges. And if you're going to buy penny stocks and then you want to sell them, somebody has to buy them before you can sell them. Usually not too good to get involved in. I like to at least, everything needs to be at least be $1 for it to be on one of the, either the NASDAQ, the S&P, or the Dow Jones. So I'd stay away from penny stocks.
So you know much about the TSP as far as for like us, all the stuff, and the G fund and the different funds that we're allowed to put our stuff in?
Mutual funds are groups of stocks. So say you invested $5,000, you bought